was mentioning in our presentation, because of lower cost and also because of better product mix and better quality, we are able to see a steady increase in our margins. So our pharma grade facility allows us to make sugars of different grain sizes to get the different market requirements. We hope this will help us continue to increase our value addition in this segment. With regards to our Rasmoli capacity, our refining capacity we have, it is next to our existing refining capacity. We have about 1,800 tons of per day refining capacity in Rasmoli, out of which 600 odd tons is able to produce farmer grade sugar and 1,200 will produce normal refined sugar. Trust this answers both your questions.
Yeah, that's so basically it's the total. It cannot be added.
Sorry, I didn't understand that.
So the refining capacity is actually the pharma grade is a subset of the refining capacity.
So 600 tons is the capacity which is able to produce pharma grade sugar, which is basically there are certain it's IP certified. You have different some additional equipment there, and 1,200 tons can only make conventional refined sugar.
Okay, got it. So just one more question I had is this country liquor, the quantum of sales, is it enough to meet molasses obligation or is it lesser, higher?
So this year, the way our current growth is right now, see the ENA we had to sell was obviously that we were falling short of our overall obligation. But going forward, we are very confident we should be able to meet pretty much our entire, give or take at least 90% plus of our entire obligation should come in from our own brand. We do believe we should be able to get there to at least this level, if not meet our entire quantity, entire commitment.
Okay, sir. And are there any plans of new products like biochemicals or CBG?
Well, we are waiting for first and foremost, this year we are in the process of converting our existing distillery into a dual feed distillery. Let the CBG policies and everything else becomes more crystal, but at least for the next 6 months, we don't see any major capex decisions. We'll wait and watch when the next year numbers, cane price, sugar price, MSP and everything becomes more clear.
Will the grain-based ethanol be having good margins or marginal?
Well, we hope they'll have good margins. Apart from that, they will help us mitigate risk. Let us have better capacity utilization. And our Rasmoli unit is also, there is a lot of maize in this area, so we do believe we should have a good steady margin there.
So you rely more on locally procured maize rather than government maize?
Again, whether we buy through the government or wherever the prices are cheaper, we'll get it from there, Vivek.
Okay. Okay, so thanks a lot. These were the questions I had.
Thank you. We have a next question from the line of Karan Mehta from Nirzar Securities. Please go ahead.
Hello. Am I audible, sir?
Yes, Mr. Mehta.
Yeah. Thank you, sir, for giving me this opportunity. My first question is, how much is the revenue that we generated from branded sugar, and what's our market share in this, and what are our plans to grow this business?
So our market share isn't very high on this current. The exact revenue number, Nalin will just give it to you shortly. We are at this point of time not looking to be very aggressive in rolling the branded play. We do believe, medium term, we do believe there could be an opportunity here. On the immediate short term, that is for the next 6 months, I don't think we will have a greater volume, but we are doing some inroads and making some studies into both the kind of products we can offer, can we become multi-product, but it's still at a very early stage. We're still at the drawing board stage.
Okay. And secondly, sir, what's the impact of change in ethanol policy on our financials?
See, this had as we were mentioning, Karan, two things. First and foremost, we do believe we would like to give ourselves a pat on the back. We timely took certain decisions which were deferring our Mirganj distillery when we started looking at the monsoon and the different kind of numbers coming out. Secondly, we do believe going forward in UP at least, we do believe B-heavy probably will be a more viable option. We have adequate capacities there. The ethanol policy, as I was mentioning, with adequate, comfortable sugar stocks, and we don't see a big downside in the coming year. I mean, the overall numbers which are coming out, we could see some sort of 7 to 8% drop in overall raw sugar production. But we are comfortably placed with opening stocks and everything else. So we do believe the ethanol policy should be more favorable towards diversion. Whether the government will allow it in its entirety or whether they will be a little bit cautious, I guess as the season and the months unfold and the monsoons and all the other data starts coming out, we'll get a better handle.
So just getting a broad picture, like for H2, what's the impact that we faced?
Sorry, I didn't hear that question clearly. Could you repeat that?
For H2, what's the impact that we have faced due to the change in ethanol policy?
See, because of the government restricting the diversion of sugar into ethanol, we all had to go towards the ethanol. So we obviously will not have enough raw material available for the entire off-season. Our grain-based capacity is still not on stream. It will only come on to stream somewhere during Q3. So we do estimate that we will have some idle time in our distillery during the next 2 months, next 4 to 5 months.
Okay. And sir, just a broad question over the ethanol thing. If we are to put up a greenfield sugar ethanol or a grain ethanol distillery, then what's the capex and asset turnover that we will be looking at?
See, I mean, we are right now only looking to convert we have about 40% of our capacity to a dual feed capacity. So our capex is going to be is only a marginal capex.
Around 50.
About 50. We do hope it will be a little lower than 60 crores. And we are eligible for the interest subvention scheme of the Government of India for this said capex. And we do hope what this will do is it will help us achieve maximum capacity utilization and give us the flexibility to do further, value addition, whether we go in for B or we go in for C, and where do we believe we'll have a better value add, we will be able to play that game.
Sir, this question was just to understand the industry dynamics. Like, if any company wants to put up a sugar ethanol or grain-based ethanol distillery, then what's the asset turnover that they will be looking at? Just to understand that industry dynamics.
Very difficult. This is a very broad-based question, which will have regional implications, capacities that people are going to look at. So there is no off-the-cuff number. You'll have a different number for 100 KL versus 300, 500 KL, and which part of the country somebody is looking to put it up at.
Existing utility.
So, I mean, honestly, I think this is going to be a little bit, if I give you any number, it will be really... all I can say is I would be very cautious in putting up a greenfield distillery at this point of time.
Okay. Fine, sir. That's it from my side. Thank you for all the clarification. Thank you.
Just to answer your question on the branded sale, we sold 31,000 tons of branded sale this year, which accounts for around 120 crores of turnover in our total sugar turnover.
Okay, for FY24.
At FY24, yes, that's true.
Okay. Thank you, sir.
Thank you. We have a next question from the line of Rajakumar Vaidyanathan, an individual investor. Please go ahead.
Yeah, good afternoon. Am I audible?
Yes.
Good afternoon, Rajkumarji.
Yeah, good afternoon, gentlemen. Sir, I have 3 questions and 1 clarification. So should I go ahead and ask everything at one go, or should I ask one by one?
Please ask all 3. We are writing it down, and it'll be easier for us to answer. Thank you.
Yeah, thank you, sir. Sir, first question is, I would like to know what is the expected production for the current ongoing quarter? Because last year, the same quarter, you produced about 50,000 tons. So just wanted to know what would be the expected production for the current quarter. And also, do you expect the sugar quotas to go up in the upcoming months and quarters?
And do you have a third question, sir, or are these the only 2 questions that you have?
No, just 2 more questions. So one housekeeping question and then one question on the buying.
Okay. On the sugar quota, Rajkumarji, historically, if you see, the quotas in the month of May and June are generally higher. Then during monsoon they come down, and then they become a little higher during the festive months. And this is also the election sort of time. So we do expect May and June quota to be on the higher side. At least I would not be surprised if they are 4 to 5% higher than last year. That seems to be the trend for the last 1 or 2 months also. Now, on our sugar production for the current quarter,
2.75 lakh tons.
2.75 lakh tons is the sugar that we estimate to produce in this quarter.
Sorry, sir, what is the number? 2.7
lakh quintals. 27,500 tons. 2.75 lakh quintals is what we expect to produce this quarter.
Okay. And sir, next one is on housekeeping question. So if I see the cost line items, employee costs and other expenses for the current quarter vis-a-vis the last year similar quarter, they are showing a significant drop. So just want to know, are there any one-offs or just if you can give some color?
Mr. Mehta, this this drop in cost only because of the betterment and recovery. See, there was an increase in cane cost, which has been partly offset by the increase in recovery. So our cost has increased by 76 rupees a quintal.
Okay. No, I'm asking on the P&L side, if you see the numbers, the absolute numbers, the employee cost for the current quarter is about 22.8 crores, vis-a-vis 33.79. So the question is, if you see the employee cost for the current quarter, it is 22.81 crores, the standalone financial, vis-a-vis 33.79 for the same quarter previous year.
So
employee cost. Okay.
Employees cost. Mr. Rajkumar, if you see the total cost, because it's being the seasonal industry, so total employee cost for the year is 93.94% as against 105
for the quarter. So also employee cost, Rajkumarji, I would imagine because some of the factories closed earlier than last year. So the seasonal people are paid off, and therefore you generally find a reduction in employee cost when the factory operations shut down because of the seasonal nature.
Okay. Got it, sir. And similarly, other expenses, the drop is significant, 122 crores last year vis-a-vis 77.
A reason for that is because in last year, in this quarter, there was export logistic cost on account of exports. That was the major contributor in other cost. And this year we don't have any exports.
Okay. Got it. And so the last question is, sir, any plans for buyback because you have deferred your the expansion plans on the distillery side. That is one. And again, extending the same question, is there any difference between your unit vis-a-vis Dhampur Sugars? Because if I see capacity-wise, everything is more or less similar, but Dhampur Sugar is commanding better valuation in the market. So is there any reason? And again, and on the name also, why we are having Bio Organics the suffix to the name? So is there anything unique, we have compared to other sugar companies?
See, I will not be in a position to really talk about why the valuations and all. We are continuing to do our best, and we hope our market cap and everything else improves as our performance continues to improve over the years. Bio Organics, as you understand, this was part of the overall Dhampur Sugar Mills Group. We do believe in the last 2 years since demerger, our overall average capacity utilization and cane crush has gone up. This year has been an aberration, but again, our drop has been lower than our peers. I would not like to mention names and would not like to compare here. This is not the right forum for not the way we would like to operate. Lastly, on the Bio Organics, Rajkumarji, our vision and we've always been talking about, we do believe long term it will be worthwhile for the company to explore the entire end of value additions with this sector, the opportunities this unfolds. So ethanol, of course, is a big part. As they were mentioning, we continue to monitor and watch the bio CNGs and the bio fertilizers and other organic chemicals. This is part and parcel of what we are continuing to monitor and visualize. And whenever the times are opportune, we would like to get into some of these businesses. But as of now, we don't have anything concrete to announce. We don't have any plans for the immediate future to do a share buyback. Let the top line and the money come into the balance sheet, and then we will, only after the money is realized and the money is realized in our balance sheet, then we will look at the best way to utilize this money, whether it's through buyback or to look at some other expansions or opportunities, acquisition opportunities.
Okay. Thanks a lot, sir. So I have 2 more questions. I'll join back the queue.
Thank you, Rasmani.
Thank you. We'll take our next question from the line of Saket Kapoor from Kapoor Company. Please go ahead.
Namaskar, sir, and thank you for this opportunity. Sir, firstly, if you could, you outlined 60 crore capex for retrofitting at a smaller unit. Other than that, what are the capex we have outlined for the other segment or for the whole year as a whole? What have you chalked out?
So Saket ji, हमारा बाकी का देखिए जो normative capexes होते हैं, some debottlenecking, replacement of worn out plant and machinery, depreciated equipment. We do believe our capexes should be in the region of 35 crores plus minus 5 crores is what we are projecting for the current off season.
But sir, कोई capacity augmentation नहीं है किसी भी segment के लिए. It is all maintenance capex.
So we don't need capacity augmentation. We already crushed 4.27 crore quintals of cane, 42.7 lakh tons of cane last year.
Right.
And looking at the cane numbers, we don't see a big jump in the coming year. So, there is no need to do any major capex augmentation. When the cane crop goes up, and we have 2 of our units where there is potential for increase in cane crop, and we will try to time it accordingly.
Right. And जो retrofitting work हम कर रहे हैं, when will that get commissioned?
We are targeting to have it ready in this calendar year, for sure.
Right. So when we look at the government policy for the country liquor, it seems that maize will be the preferred crop for liquor, for country liquor going ahead, and biofuels would be the molasses part. So are we also working on the same thought process that the feedstock for the 2 segments would be different and there will be a stable policy on the same going ahead?
Actually, Saketi, I think, for UP, molasses, we do believe even in the near future will continue to be the preferred feedstock for country liquor. About more than 90% of the sale in UP is in country liquor is in from molasses-based country liquor. And the price for maize-based country liquor is still higher than the sugar-based country liquor, so we don't see much of a market switch happening there in the near future. Therefore, we believe the opportunity will be to provide more grain-based ethanol towards the biofuel segment, and probably some part of our sugar-based alcohol will go towards country liquor as our market share improves. That seems to be our understanding for the coming years. But of course, if a better opportunity avails, we will like to grab it immediately.
Sir, for FY24, our average realization for ethanol was lower than last year. Sir, could you please explain me?
So I'm thinking it's because syrup quantity has also been lower. The B heavy and C quantities have come in, and the higher ENA percentage. Right. ENA is sold at 19.5 rupees towards country liquor. That is the price which UP government has sort of given a mandate for. So therefore, if that percentage increases because they have increased the ethanol ENA ratio, the ENA percentage has been, the country liquor obligation has been increased on all sugar factories. So coupled with the reduction in B and syrup-based alcohol, syrup-based ethanol commanded a premium of about 5 rupees over B, and it commands over a 15% premium over C.
Please come again for the last part I missed.
After say last year we had a substantially higher syrup-based ethanol, and the balance quantity was B ethanol.
Right.
And the ENA percentage was lower because the obligations were lower.
So this season, also the sugar season, the obligation is 19% only. The percentage has been kept same for the country liquor.
This year the obligation remains at 19%. But last year 19% on B, 26% on C. But last year, if you recollect, they increased the obligation towards the second half of the season when the factory shut down. So they had increased it from retrospective effect. So bulk of that impact, that increased impact actually did not come in the previous financial year. It came in this financial year.
Right. And two small points, and I'll join the queue. First of all, the branded sugar part, you mentioned about revenue of 124 crore. So for the full year. So how should we look at the margin profile? I think so we did around 1,600 crore. So closer to 8-9% we have done from the branded sugar, and what kind of margins we attribute to the segment, and also going ahead, what can be the incremental sales from the branded sugar going ahead? How is the acceptance and the price point, if you could give some more understanding?
The branded sugar market continues to remain very competitive, but we don't want to discount our sugar and sell. Therefore, we do see a incremental volume growth. It will probably be sort of low double digits. I'm not at this point of time we don't want to discount our sugar and squeeze our margins. That's not the game we want to play. So going forward also, we do expect our branded sugar business to continue to increase in a normal organic manner. The other question was, apart from branded sugar, I think that was it. That's what we see in the branded sugar.
Yeah, this was the only question, but what kind of growth can we see? We will be diverting more of the sugar into the branded part since we are commanding a premium. We just wanted to understand.
Our capacity is there, Saketi, as the demand keeps on coming up, and if our distribution system as it keeps on improving. But too early to predict a big growth number. If you look at historical trends, about 10 to 15% growth will probably be the right number for our own brand.
Also, pharma base से कितना contribution आ रहा है और इसमें कैसा growth देख रहे हैं? I think so we have alluded to the fact that that's also a high margin segment.
It's a pharma market, as we understand. It's a long-term play. To make inroads, compared to last year, we will see an increase in volume. We'll have a couple of, maybe about 25,000-30,000 tons of sugar will go towards this segment in different players. But, this is a business which takes time to develop and grow. With certain institutions and pharma, they have a big, lengthy qualification process. They have lengthy, processes. So, but this is again a growing market. We do hope we will see double-digit sort of growth numbers here.
Last year का क्या revenue था?
Mr. Kapoor, I request you to join back the queue, please.
I'll join just जो सर ने आंसर किया मैं उसी पर प्रश्न कर रहा था. What was the last year sales number for the pharma grade sugar?
Last year was the first year, and 90% of our sugar went for export, so we didn't have much quantities in the domestic market. We had about 10,000 odd tons last year.
Okay. For the closing remark, I'll come join the queue, but please do give an answer.
Thank you.
Thank you, Mr. Kapoor.
Thank you. Ladies and gentlemen, we request you to limit the questions to 2 per person. Kindly join back the queue for follow-up questions. We'll take the next question from the line of Devendra Chawla from Prasun Exponentials. Please go ahead.
Hi, thanks for taking my question. I'm a bit new to the stock, so I just wanted to get a sense, what's the management's long-term vision for this business, and what are the challenges they see coming up in the next couple of years to getting towards where they want to go?
Hi, Devendra. Sorry, I couldn't completely. There was a little disturbance. Your voice, we got lost. And would you repeat the question, please?
Sure. So there's 2 parts. One is, what's the management's vision for this business? Because it seems like there's a lot of lines of business in the company currently. And the second is, what are the challenges that the management is seeing in this business over the next couple of years to get to where it wants to go?
So, we've always been very clear that we are looking to enhance our profitability and have sustained growth. We've been focusing very extensively in augmenting our cane acreage and cane area. So prior to this year, we did see us jump about 10% jump over the last 2 years in our cane growth and cane crushing. This year, unfortunately, because of various weather-related factors, the cane growth numbers for UP in our parts were down by about 15 to 20%, but we do believe we did a good job by limiting it to about 10%. as we spoke about in the previous years, we are looking at continuous value addition and byproduct utilization. So ethanol capacities have been streamlined. Now we are looking at grain because, we believe we have certain strategic advantages and able to source grain at a cheaper price, increase value there. And now we are seeing a certain amount of value addition play, which could come in as our businesses in institutional sale and farmer sales develop, maybe branded play develops going forward. We could see some better value addition in our country liquor business. Those kind of things will come into play. And we will be prudent with our, we will grow. We would like to grow, but grow cautiously and prudently. That has been our sort of mantra since the demerger. We've been sort of sticking to that.
All right. Thank you for that.
Thank you. We have our next question from the line of Vivek Gupta from Novus Capital. Please go ahead.
Sir, one more follow-up question I had regarding ESG. There are various initiatives which is mentioned in the presentation. So is there a big cost attached to these initiatives, or how does it affect margin?
No, see, we don't, we as a company do believe in ESG. That is something which we continue to do. But again, we do like to believe it's all very prudently done. We believe long term it will also yield better results in our cane, our association with our farmers. We do believe it will also help us with marketing our products to the institutional customers that we are looking to do. But to answer your question, there is not any, there is no much, the cost structure, there's not anything significant. Or if you see our overall costs, we are trying to be cautious about that, and we don't think we will go overboard in any of these expenditures.
So one last question on the cane crush. On hindsight, do you think the increase in capacity for cane crush was earlier than earlier than it should have been, given that the production has been lower?
See, that is hindsight is 20. We can always hindsight is 20/20, as they say. But the best way to look at it is because of this, at least some of the last 2 years, if you see, we were able to do a steady growth in cane crush. And one of the reasons where reduction in capacity utilization or our reduction in overall cane availability is 10% is also a factor of having this enhanced crush. You don't see the season duration remaining same. You see the season duration decreasing, but the crushing capacity, the number of days reducing, but you crush the same amount of cane per day. Mm-hmm. And any of these capexes, you don't really do it for a year-on-year basis. There was a weather phenomena this year. There was certain, yield phenomena, diversion phenomena was substantially higher this year because of certain policy reasons, and we do believe we will bounce back sooner than later.
Okay, so the recovery will be better because of the higher capacity, crushing capacity.
For sure, recoveries are better, and overall, even our average utilization will continue to improve. I'm very confident of that.
Okay. Thank you, sir. That's about it.
Thank you. We have our next question from the line of Sanjeev Damani from SKD Consulting. Please go ahead.
Namaskar. Thank you for the opportunity. Sir, I was going to ask you two things. One is molasses stock of B and C as on 31st March. That is my first question. And secondly, is government going to give an enhanced price for B heavy now? Because for C, they have revised by 6-7 rupees intermittently in the last year or in the first quarter of this year. Kindly reply.
Sanjeev ji, second part का मैं दे देता हूँ आपको जो stock का number अभी Naren will just give it to you. Molasses B की price पे we are requesting for a revision, but personally, if you ask me, I am not hopeful. Next year they should definitely see it. We should hopefully see a revision. For this year, maybe not.
Okay, but still we are going to supply them, made out of B only, or can we extract the B and fully make it recover the sugar and then sell it as C? What will be our preference?
कर सकते थे थोड़ा सा हम लोगों ने last year planning करके our capacity to divert towards C. जैसे if you look at our Mirganj unit did not have any capacity to make C.
Okay.
We had planned for it last year itself, and Mirganj में हम C बना पाए. Mansurpur Asmoli में भी बना पाए, but to a little lower we could not divert entirely, extract the entire sugar. Next year, I do believe B heavy will be there, but we will be